Good morning, I'm Maiki Oreta and you're watching Basis Point, where we dive deep into the numbers and the stories that drive our economy and shape our world. Before we get down to business, an update on the tropical storm Enteng, which is still dumping heavy rains in several parts of the Philippines. Now, national disaster officials are validating reports of 10 deaths as Enteng, coupled with the enhanced southwest monsoon, triggers flooding and landslides. Once again, Malacanang suspends classes in public schools and work in government offices in Metro Manila, as well as in the Calabarzon region. Several areas in the north have also suspended classes today due to the heavy rains. Signal number 2 is still up over provinces like Ilocos Norte and parts of Ilocos Sur. Weather Bureau Pag-asa says Enteng, which is moving westward, was last spotted over the coastal waters of Lawag City in Ilocos Norte. It's packing winds of 75 kilometers per hour and gusts of up to 115 kilometers per hour. Enteng is forecast to reach severe tropical storm category today before exiting the Philippine area of responsibility tomorrow morning. On to business news. The local manufacturing sector sees steady growth. The headline S&P Global Philippines Manufacturing PMI was stable at 51.2 in August. This suggests a continued modest expansion in this sector for the 12th straight month. S&P Global says this was on the back of a strong domestic demand as it pushed growth in new orders to a 3-month high, even as exports declined for the first time this year. While demand trends improved, however, S&P Global says local companies were hesitant to hire, suggesting that they remain cautious about the growth prospects. Other Asian peers also showed factory growth as China's Caixin manufacturing survey picked up, while similar surveys in Japan and in South Korea showed improvements in activity. Now, over in Europe, top car maker Volkswagen is considering closing factories in its home country, Germany, a first in its 87-year history, citing industry headwinds. Now, Volkswagen is also ending a long-standing job security program that would have prevented layoffs until 2029. These extreme cost-cutting measures highlight the German car maker's struggles amid stiff competition from cheaper vehicles from China, particularly in the electric vehicle segment. Volkswagen is embarking on cost-cutting measures targeting 10 billion euros in savings by 2026. This comes as Volkswagen has lost almost a third of its market value over the past 5 years, making it the worst performing stock among Europe's major car makers. Now, over in South America, Brazil's Supreme Court unanimously upholds their ban on social media giant X in the country. But all isn't lost, as 3 of the 5 justices say that this ban could be reversed if the platform complies with its previous rulings. Last week, a justice ordered the shutdown of X after the company missed a court-imposed deadline to name a legal representative in Brazil. That's amid a probe into the spread of alleged misinformation and hate on the platform. X-owner Elon Musk decries the move, calling it censorship. X has about 22 million users in Brazil, its 6th biggest market globally. Elsewhere in the world, China is threatening to retaliate if Japan implements new semiconductor controls to the disadvantage of Chinese firms. Bloomberg reports a Japanese car maker, Toyota Motors, privately told Japanese officials that the new curbs could cost Tokyo access to minerals needed for automotive production. Senior Chinese officials have also repeatedly made this position clear in recent meetings with their Japanese counterparts. This as China's Foreign Ministry says they are committed to maintaining the stability of the global supply chain, as with fair, reasonable, and non-discriminatory export control measures. This July, Japan began to restrict the exports of 23 types of semiconductor manufacturing equipment to China, in line with a push to curtail China's ability to make the most advanced semiconductor chips. Looks like China's tech heavyweight Huawei is seeking to steal the spotlight from its American tech rival Apple's much-awaited product launch next week. This after Huawei announced that it too will unveil new products on September 10, just hours after Apple's event. Reports say Huawei could unveil the world's first commercial-ready smartphone that folds twice. Meanwhile, Apple is expected to debut its iPhone 16 lineup. Back in June, Huawei reclaimed its share of the premium market with its Mate 60 series, effectively pushing Apple out of the list of top 5 device makers in China. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Over in Wall Street, U.S. stock futures are little changed ahead of a data-packed week. Now, futures tied to the Dow Jones Industrial Average shed 0.1%, while futures for the S&P 500 shed about as much. The tech-heavy NASDAQ futures are down a little more, lower by 0.2%. Fresh economic data from China provided a backdrop for cautious trading. The sluggish factory data is fueling lingering concerns over the health of the world's second largest economy, where a property crisis is currently curbing domestic demand. This week, investors are shifting their focus to the Federal Reserve's upcoming policy meeting and to fresh employment figures, which are all expected to shape expectations on the magnitude of potential interest rate cuts. U.S. markets were closed on Monday on account of the Labor Day holiday. Now, trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. Now, right now, the PSEi index is up marginally, up by 0.2% to 69.37. All shares index up marginally as well, up by 0.2%. Now, the financials, industrial, and holding firms are all trading in the green, whereas the services, mining and oil, and property counters are flat, however, trading to the downside, down by less than 0.1% each. Now, to help us make sense of the numbers, we have with us Ed Francisco. He is the president of BDO Capital and Investment. Hello, Ed. Good morning, and thanks for being with us.
Good morning, Maiki.
Okay, so Ed, we're officially done with a ghost month, and things are looking up. Inflation is expected to be benign. Interest rates are coming down here and in the United States, and investors seem to be shifting asset classes from fixed income. Now, equities are back on the radar.
Yes.
Things are looking up for us. We're just 63 points away from the 7,000 mark. How do things look from your lens?
Looking very positive. Of course, as an investment house, we're always providing all solutions to clients. But in terms of the equity outlook, we have 4 deals that we're working on for the rest of the year, follow-on offers and preferred shares. So in fact, we're coordinating just the timing because we want to make sure that the market doesn't get over fatigued na sabay-sabay. And then next year is looking good also. So it's very positive, Mikey.
Correct. Looking good next year as well. I know you have some IPOs in the pipeline. Maybe can you just walk us through what we can expect in 2025?
Yeah, I was just making a count, So prior to going online, I was counting around 10 deals that I'm aware of. We're involved in many of them, but not necessarily all of them. So what's been disclosed, you've read about Han, which is a resort in Subic. You've heard about GCash. We were convinced Ricky Rason and Guillaume Lucci's Prime Infrastructure to re-IPO again because we just postponed that. We will convince SM to reconsider their REIT. There's an infrastructure play also, not MPIC, but another one that could list. Of course, Tollways and Maynilad of the MVP Group have been mentioned in the past. There's a meat company that might IPO. And there's also a casino that was planning to IPO. They postponed it. And of course, also the MVP Group, the hospital group, they might re-IPO also.
Okay, interesting times. Going back to our market, can you talk to us about the current market dynamics? How do things look from your perspective?
Yeah, no, I mean from the securities perspective, or at least from the trading perspective, the fact, as you mentioned, the fact that interest rates have gone down, even if it's just the first signal, that's fine. That's already a downward trajectory. It's already showing in the rates, in treasuries, and yields. So that's good because there's a shift of asset classes. One is local investors are shifting back to equities. 2, foreign money is coming in, right? And again, because of this downward trend, generally it's optimistic. So people are borrowing and people are also raising capital for their expansion. It's also showing the double-digit loan growth in the banking industry. So all things are positive. So the only caveats really are a war, hopefully, which won't happen. And we just want to see peaceful U.S. elections and, of course, what happens in Gaza sana is resolved.
Yeah, of course. Barring any unforeseen circumstances, everything looks so far so good for the market. Going back to the particular figures, we've got inflation coming out and we've got employment coming out Thursday and Friday, respectively. What's your outlook for inflation after 4.4% in July?
Yes. As long as we're within the band or hopefully within the 3-4%, we should be good. I already applaud the monetary board for taking the bite, and then lowering rates first. We're also expecting anyway the FOMC, the Fed, to lower rates, right? It's a question of how much. So as long as there's no surprises there, we're on the right track. We anticipated better rates. We anticipated the Fed going down, so that's okay. The peso is even strengthened despite us lowering rates, right? So things are looking good because investors are in. Lots of people coming in to see me. Lots of road shows. Lots of foreign delegations coming in, Mike.
So it's going to be a very busy time for you moving forward, Ed, and that's always a good thing. Now, going back to the expectations of benign inflation and how that affect the rate cuts. How many more are you expecting, and where do you think these rate cuts will take the PSE index?
Okay, so there are the two more, of course, monetary board meetings, but we cannot discount the fact that they can still announce a rate cut even without they can declare an emergency meeting. So even if we bring it down another 25 to 50 basis points for the next 3 months is fine. The fact that it's signaling there, but for the whole year and the next 12 months, if you go down 100 basis points, 150 basis points, that's already great. It's already showing the impact. It will also help even real estate. People will be able to buy again, right? Cars are not a problem. There's double-digit growth, but condo sales, housing sales have slowed down, but affordability would increase because a 1% decrease improves immediately your accessibility to buying a bigger house. So that's great. So inflation is expected to be controlled, not necessarily benign, and that's fine. And therefore, it's going to be an improvement for the economy overall.
All right, yeah. Okay, taking a look at the current market dynamics, we are at 69.37. The market has faced tough resistance at the 7,000 mark. You think these inflation coming in, not benign, but within expectations, you think that's going to be enough to get the market moving beyond the 7,000 resistance level?
Okay. From my perspective, I think we've factored in inflation rate. It's a given that's going to be controlled. So the big mover to bring us to past 7,000 will be after September 17, 18 in the US, right? The FOMC. So once they announce that, I think the rates will go up. Index will go up. Admittedly, of course, the only reason naman it's stuck at the 69 level because lots of people also got hurt, so they took profits. But now that people are taking profits, they're comfortable already, they're repositioning again. That will bring us to the next bump up. So I'm very comfortable with where we are right now, even if we're not at 7,000, because even if we end at 7.2, 7.4 year end because of 1 or 2 more rate cuts, that's very positive already.
Yeah, and all of these corrections are just healthy, but the long-term trajectory is steadily upwards, and that's
Yes.
That's what we want to see. Okay, now on the corporate front, we had a big mover yesterday. SP New Energy Corporation, or SPNEC, the world's largest single-site solar project. I wanted to get your thoughts on this, especially after the stock soared to an 8-month high yesterday on interest in its 200 billion peso Terra solar project. Now, the share price jumped 11.3% to 1 peso and 28 centavos each. It was the 9th most active stock with 140 million pesos in trades. Now, again, the board is led by Manny Pangilinan, President, CEO, and investor interest from all the big guys, from Japan, UK, China, the Middle East, and the US. Talk to us about this stock, Ed.
Okay. I have to admit I'm intimately involved in this company because maybe one of the reasons the stock went up, again, it's all chismis, was because BDO has submitted the proposal to fund the whole project. So we're waiting for a formal announcement, but we're hopeful because we're that comfortable with the deal in terms of it's just a matter of the execution, but we've reviewed the plans, we reviewed the proponents. And then, of course, the MVP group hasn't announced yet, if I understand the new foreign partner coming in. But of course, they had a good process. They had the short list, so it's a formal announcement, and I'm sure that will be just add luster to the name, and that's why we think that it will really expand and it will really be on the runway to build the largest solar. That's why we're comfortable with MVPs coming in, and we're fully supporting it.
Yeah, even Morocco wants to come in, wants to increase its investments in this firm. So it's very bullish for this stock. Just where it is, if you could share some information. Phase 1 is set to be completed by 2026. It's not even really online yet, right?
Yes, they're building it because the challenge the last few years was really the land acquisition, right? Because of course it's the rule of thumb is 1 megawatt per hectare, or is it 10,000 hectares, right? So imagine the huge amounts of land you need to get this these several megawatts. So they had to, I think they bought already 2,000 or 3,000 hectares of land for the solar, and that's taken a while. They've converted that. But once that's in play, then at least everything should fall into place, and it's really execution. Land was really critical, and of course, getting all the permits, because it's an important infra project. Everybody is already supporting this. We're excited, and of course, for solar, it takes around 16 to 24 months to build, so it will be phased, of course, but phases being built. But in the next 2-3 years, next 1 to 2 years, we'll see that already there ongoing.
Well, all of these renewable pushes are really so exciting. One more question, Ed. At 1 peso and 28 centavos per share, how would you say that this is priced right now?
For Espinec?
Yeah,
This is Espinec?
for Espinec.
So no, in fact, maybe I guess that's why people have been buying. It has a lot of positive upside, right? Because they're not really factoring in yet the growth and the revenues from when Terra comes on play, right? So when Terra comes on play, that's going to have a huge boost on the numbers, so which is good, because we want to wait for it to get fully awarded and on stream. But that price should go up significantly, and that's why also MVP has gone in long, is fully supported, and that's why even Meralco and the other related entities want to increase their stake. They're that supportive of this deal.
All right, definitely something to watch. Thank you so much, Ed.
Thank you, Mike.
Ed Francisco, the president of BDO Capital and Investment. Now we're taking a quick breather. Basis Points will be right back. Welcome back. Let's check on the business headlines in the major news websites. On the Philippine Star, the country's raw sugar production may fall to its lowest level in 25 years as farms reel from the effects of El Nino. The Sugar Regulatory Administration estimates that raw sugar output in the new crop year may decline by at least 7% to roughly 1.8 million metric tons. On Business World, the SM Group of the C family wants to participate in more government-led infrastructure projects. The conglomerate has partnered with the Transportation Department to develop busway concourses along EDSA to improve commuter access and efficiency. And on Bilyonario, strong investor interest in what can be one of the biggest solar farms in the world sends the shares of SP New Energy Corporation to an 8-month high. SP's New Energy stock surged more than 11% to 1.28 pesos each, making it one of the most actively traded stocks yesterday. And before we go, as the Paralympics in France gets underway, a UK startup is helping the visually impaired take part in the experience and in real time. That's through a headset that stimulates photoreceptor cells, allowing spectators with visual impairments to manipulate the image they see to suit their individual needs. The device, developed by Give Vision, was also used in this year's Olympics. Give Vision says its mission is to set new accessibility standards for sports and entertainment.
The key thing with this is, for a lot of people with sight loss, they need things to be enlarged and close by and quite bright. And this headset kind of encompasses all of those things. There's also a second setting where we connect in with the local TV cameras at an event. And this means that the person using the headset gets real-time footage of what's happening in front of them. but they don't need to spend their time focusing on what they want to see or what they want to watch. The camera operators, who are highly trained to follow all of the action, do this for them.
And that's it for Basis Points. I'm Maiki Oreta. Stay tuned tomorrow for more news on the financial markets and more. Keep it here on BMC, the Billionario News Channel, always on top.